And it is about the good finance that we have to provoke and construct in order to include all the people who are at the moment excluded from our social and economic fabric. We talk about 3 billion people. How big is the world population today? Anybody? 7 billion, 6 billion. You see, we talk about billions, but they are growing and they're probably going to double in the next 50 years. That is the prediction. And it is so brutally enormous that we check out numbers, billions today, sound not even big anymore. But this is half of the global population has no or little access to finance. What does that mean? The biggest job generators in the world are the small and mid-sized corporations. And these little companies, they need working capital. The little butcher needs capital to buy the cow in order to sell the meat in the next day. He needs to have working capital from the blenders. They have the cash cycles which can take up to a year. If we do not have an economic fabric that provides capital to all these enterprises, there will be no jobs. That's why finance is absolutely essential, and the good finance is essential in order to create the jobs and to have prosperous societies across the world. Today we talk about financial inclusion and how new technologies can help to financially include the non-banked. In OECD countries which we belong to, about 98% have a bank account. With a bank account you have an identity, and with such you can do a lot of things. You're connected to economic fabric. Of the non-OECD, 50% have no bank account. They cannot get capital and they cannot get loans. They cannot do any commercial transactions whatsoever. And the cost of transaction is extremely high. And they have to borrow from friends and families, which then leads to a limit of what they can do. So I would like to welcome all the panelists that we have today. And I'm really, really thankful that you are here because we look at different aspects. There are a lot of talks here in Davos about the new technology as such, but technology as such doesn't solve the problem. It needs a collaboration between all stakeholders. The stakeholders from the technology side and industry side, the stakeholders from the finance and markets, which provide the liquidity in order to have new technology enabled into the industrial fabric. And we need the correct policies which enable of all these actors to and a collaborative effort to make transaction possible and safe across different jurisdictions. I would like to welcome Alexander from Geneva. Alexander is, yes, please. Please welcome Alexander. Alexander from Geneva is besides being one of my dear mentors in order to try to understand the global economy and the global capital markets, has been a very strong influence in educating and forming the very policymakers that today guide the world and try to structure the capital flows and make them safe across the world. These include students which today head some of the largest treasuries. They are on they're presiding over some of the largest banks. They are leaders in international organizations like Bank of International Settlement, which is like the bank which regulates the financial flows of all central banks. They're leader in Financial Stability Board. They're at the IMF, at the World Bank, and so on. Alexander has been twice the president of the Graduate Institute. I touched this Graduate Institute. You will hear again and again, because it is one of the hearts of forming leaders for our global institutions in order to make this world safer and more collaborative across different segments, not just finance, obviously in healthcare, WHO, we have about standard settings and so on. Second, we have the representatives of a big bank. The big banks which are portrayed bad sometimes. They can go down, they can go back up again. Veronica, please join Veronica from UBS. She's the head of innovation and she's right next to the chief technology officer, which until last year was Stefan Moore. He's a friend of Stefan Moore who was here on our panel last year, who structured UBS. And UBS is one of the leaders in trying to incorporate new technologies, financial technologies, across the entire value chain of banking and in collaboration with other leading banks around the world. They're very engaged also with the ETH, you can see in Zurich, with MIT in the United States, and other leading institutions. Then we have from the consumer side, at the end we are all consumers of finance. It's like a product and a service. And as such, we have to serve the consumer better in order to provide credit and financial services. Today, this is a huge problem. I give you an example. You think this is a problem in emerging markets. Well, it is also a problem in developed markets. I am from Switzerland, and Switzerland perceived as being the capital of finance. Guess what? How long it took me to open up an escrow account. An escrow account is an account you put in money. You cannot take it out until something else happens. The escrow account is necessary to put in 100,000 to open up a company in Switzerland, a legal jurisdiction. It took me, guess how long it took me just to get an escrow account to form a normal legal entity in Switzerland? Anybody's guess? It's Switzerland.
3 months.
3 months. Nuria, next one. 6 months. Other. We're still waiting. You must be from India, right? You go through the government. But you're probably faster than we are. You were right. It took me exactly 6 months in Switzerland as a Swiss citizen with all whatever you want to open up an escrow, to open up a company. Who can wait 6 months to open up a legal entity? Investors walk away, partners walk away, and I think you're an idiot. You're a Swiss, you cannot even open up a bank account. Okay, perfect. So, well, UBS wouldn't even consider. By the way, I went all the way to the boards of UBS, the boards of Credit Suisse, their friends, the head of legal affairs and so on. Well, compliance blocks everybody else. I think we are more marginalized in developed countries than in developing countries today. It's really absurd. Anyway, so this is a thing, the customer is not being served properly. Nuria, please welcome Nuria. She is one of the proponents of making the interface between the customer and the services much, much more efficient. Thank you for being here. Now we have Yorkie from Microsoft. Now we talk a lot about Bitcoin. We talk a lot about blockchain and cyber currencies, all the buzz today. I don't know what the price of Bitcoin is today. Anybody knows? 13, 11? 10,000 goes up and down by 10,000 a day. I mean, it's amazing stable currency. It's fantastic for doing commercial transactions. I think Venezuela is more stable in the inflation rates than the Bitcoin. But everybody loves it, and it seems to be the future. Fine. Now, all that is based on blockchain. And a lot more is being based on blockchain, as we learned. And Yorkie, please welcome Yorkie, the founder of the blockchain segment within Microsoft. 70% of the world's leading corporations, 70% of the revenue strongest corporations in the US have the cloud with Microsoft. Now, Yorkie works very strongly with the cloud, obviously, with this Donald Kosman, who was the head of research, who created the Microsoft cloud, and which blockchain relies on in many transactions. So without the cloud, there is no blockchain. It's like and with the cloud, there is no Davos. Today, we have no cloud, and we have Davos. So welcome, Yorkie.
Thank you.
Thank you so much for being here. I would like to first open the first round, as we usually do, is that everybody introduces briefly himself and what their focus is and how fintech can challenge or can provide solutions to the current financial fabric. Alexander.
How many hours do I have for the second question?
It's the first one. So the first one is a couple of minutes. The second one is we look.
Okay. I think you've introduced me, so I don't need to introduce myself, except to say that I've always had an interest in monetary economics and money and so on. And 3 years ago, my wife said, there is this thing called Bitcoin. What is it? Look at it. Can you tell me? And I looked at it, and I couldn't understand it. And then I asked myself, is it money and so on? So I got interested in those types of questions. Now, where does it impact my work? It impacts it, or it impacts it in two dimensions. One is if you want to keep up with financial markets, understand what's happening and so on, there's no way you can do that without trying to understand what is going on. And I think I was telling you there was a quote I had used in some presentations, if I can find it, which is a quote that Wolfgang Münchau gave in the FT in 2014, which will come. The degree to which economists have ignored Bitcoin is surpassed only by the extent to which Bitcoin enthusiasts have ignored economics. So I've been trying to bridge that gap a little bit. I'm not sure I've really succeeded, but anyway. My other interest is in economic policy, central banking, financial stability, capital flows, and so on. And in that field also, fintech in general, blockchains and so on in particular, but fintech in general, the combination of all the innovations is causing all sorts of challenges, has new opportunities for regulators, central bankers and so on, but it has also challenges for them. Now, I would be talking a little bit about those challenges and opportunities, but I think, Caspar, that is for a second round.
Yep. Thank you. Veronica.
Yes, thank you. I'm certainly not just a representative of a bad bank here. I think banks are providing a lot of useful services, but clearly I think technology changes and also the changes in the consumer behavior and expectations has really made a big difference over the past few years for all banks. So when we look at the wider topic of fintech, it's really impacting at three different levels. It's impacting at the client experience level. We see this increased access options for people to financial services. We see large platforms that have evolved, the digital tech companies that are increasingly moving into offering also payments and very simple services that previously had only been owned by banks. And so there is almost like an increased access and democratization that is also including many more people to the financial system. I think if we look at China, there's over 700 million users of WeChat Pay, payment services, etc. So there's a whole lot of people that are now using electronic changes, and that is a big change from an industry that previously had been predominantly using personal contact for engaging with their clients. And the second angle is around the product innovation bit, and how can we really use technology to get better at creating products, and that starts with having more data and more automated, intelligent algorithms that we can use to produce products, but also in terms of exciting new areas that we see with the tokenization, with the digitization of other assets and new assets coming up, which is an area that we are heavily exploring at the moment. And then last but not least, it's that collaboration also with other partners and with also regulators on building the new rails and the new infrastructure so that we can gain more efficiencies that are so required in this industry that has built up over 10, 20 years with lots of complex processes, which clearly need some optimization. There's lots of room for improvement, and it's about bringing that together. So we have this one example where we've introduced video online onboarding for new clients in Switzerland. And effectively, because we work very closely with the regulator, we could basically, by the time we had it developed, after a couple of months, we could go live with it immediately because the regulation also was there. And that collaboration across all angles within the company, with our employees, and with the ecosystem, being that small companies and startups with good ideas or larger companies, is very important. So we, as an innovation function in UBS, we take care about a lot of that research and that collaboration enablement.
So the stress is on the collaboration with the different stakeholders and the proper regulation that you can actually deploy all these innovative steps that you undertake.
Yes.
Yeah, that's great. Nuria, the consumer. Is he the good one or the bad one like me?
Well, first I'll introduce myself. So I'm Director of Research in Data Science at Vodafone globally. I'm also Chief Data Scientist in a nonprofit organization called Data Pop Alliance, which is an alliance created by MIT, Harvard, the Overseas Development Institute, and Flowminder, who are four nonprofit organizations themselves. And the goal of this nonprofit is to realize the vision of using big data for positive social impact. So my area of expertise is modeling and understanding and predicting human behavior from data using artificial intelligence techniques. I've been doing this since the mid-90s. I did my PhD at MIT. And what has changed over time is which behaviors and which data I have used to understand people. So the intersection between this session and my expertise comes because my answer to the question, let's financially include 3 billion people, is the best tool that I think that we have to do so is the mobile phone. So for the past 10 years, I have been working on understanding human behavior as seen through the mobile phone network or through the actual devices. So I've done a lot of projects on understanding different aspects of both aggregate and individual human behavior, and some of them have an intersection with financial inclusion. The phone, as you know, there are more phones in the world than people, and the mobile phone is the most widely adopted piece of technology in human history. More people have access to the phone than access to drinking water or to proper sanitation. And what is interesting in the context of answering this question is that it's a global phenomenon that is happening both in developing economies and in developed economies. So with that context, some of the projects that I've done and I'm working on are related to financial inclusion. Given the fact that everyone has a phone, given the fact that there are 2 billion people in the world who are unbanked and who have no access to credit and who basically don't exist from the financial system perspective, but who need access to credit because, as Caspian said, they won't be able to prosper. They won't be able to buy a cow or buy whatever or create a small business without access to credit. How can the phone help? And in that context, we showed that from the analyzing the mobile behavior of people can actually be seen as a proxy for credit worthiness. And we can create an alternative credit scoring system that is based on your mobile phone behavior. So when an unbanked person needs credit, they don't have a bank account, but they do have a mobile phone. So they could say, well, I'm a trustworthy person, my mobile phone behavior, demonstrates that. So you can actually give them credit and, at a more advantageous, conditions than if not. We've also found that we can infer socioeconomic status from aggregate mobile data. And this is very valuable because understanding the socioeconomic status of a region is a proxy to access to education, to healthcare, to proper, services. And as you know, right now, the golden standard, the ground truth for socioeconomic status is usually census data, which is typically obsolete. Because in most developed countries, the census is elaborated every 10 to 12 years, but in many developing economies, is elaborated maybe every 20 or 30 years. For example, the last census from DRC, I think, is from the 80s, which obviously is totally meaningless today. But again, people have phones, so can we infer socioeconomic status from the patterns of behavior of the mobile phone? And finally, the last piece that I wanted to mention is the revolution that is happening and has happened for the past years in the context of peer-to-peer mobile money transactions using the mobile phone, where I think the most emblematic company is M-Pesa, which is owned by Vodafone. So I'm also very interested in understanding from a research perspective, what is the value that M-Pesa is bringing to the societies where it's being used? How can we actually make it more inclusive? How can we expand the impact that it has to properly answer this question that you were mentioning in the panel? Thank you.
Give everybody a mobile phone and the world will be better tomorrow.
That's what I'm working on.
Perfect. Yorkie.
Yes, so my name is York Rhodes, and I'm one of a couple of people who brought us down the blockchain journey. I actually started teaching about Bitcoin in my e-commerce class quite a few years ago. And I wasn't too excited about it from a technology perspective until in the summer of 2015 when people started talking about blockchain as a noun. And then as a technologist, it became interesting to me. So I started probably a few years too late in terms of investment. Yeah. But it's been an interesting journey. Blockchain, as we look at it from a Microsoft perspective, it is a catalyst for digital transformation. Whether you wind up with a blockchain or not, that in and of itself is good, right? So in the context of financial inclusion, I would ask the question, like, if everybody has a phone, and a lot of people have had phones since 2000, right? We haven't really solved the problem, right? And that's because technology doesn't solve these problems, right? There are so many more systemic things, right, that have to come into place to solve things like financial inclusion. We actually sort of believe that, and this sort of goes to your point about that you were making about what does the phone give you access to, is that economic transactional history and identity actually solve for financial inclusion. Those are some of the foundational things that help you solve for that. Just as an aside, I mean, our job as an organization is to help enterprises like UBS and others cross the chasm to figure out how do I make use of new technologies in general. So blockchain is a similar vehicle as a technology where we do those types of things. So blockchain happens to have many other really interesting qualities besides being a tradable commodity or currency, depending on how you look at it, or new asset class potentially. Again, depending on how you look at it. But it's a fascinating opportunity for transformation, and particularly, we think there's some aspects of financial inclusion that it'll help with.
Perfect. Thank you so much for the first round. Today we read a lot about financial technology. We read a lot about fintech. There is a lot of buzzwords out there. And it's very difficult to make sense already from within the community. I think most people do not know what they're talking about. And it makes even no sense at all from people who have no clue at all about technology and don't understand finance as such in a way, and the importance to our daily lives and the growth potential of the future. I would like to ask the panel, what would you consider, the most important ingredient that is necessary in order to make all this new technology prosper in society and in socio-economic fabric, not only in our world, but also in the developing world. Because we have, let's say, the three worlds which I depicted in the program. It's on one hand, it's from the technology industry side, and then we have value chains, we have up-down midstream, we have the sides from finance and markets, and we have the sides of the policies and the laws, which current realities and possible future regulations. I would like to ask the panel, because we have here a diversity which is very unique, because we have so-called a representative, let's say, for the international fabric of regulations and policies with Alexander. We have of a big bank aspect from Veronica. We have from the mobility, which is absolutely key in the financial technology world. Without the mobility, there will be no inclusions. And we have the aspect of the pure tech side from Microsoft, which is the other ingredient. So we have from the tech side, from the mobility, from accessibility, from the proper banking, providing the financial services, and then how to regulate and how to frame the rules and the laws to not obstruct the new innovation, but to accommodate and leverage the good sides across all societies, and not to be abused by others or not to abuse others. Maybe I would like to start for that reason with Veronica. What would you consider from your perspective the most important ingredient in all these three worlds?
Well, I mean, we've also come our journey, especially on the blockchain world, where we started 2015 with our lab in London to explore this. And I think when we looked at use cases in the beginning, everybody thought blockchain would solve everything, and that created a bit of a tech hype. But it's really about understanding what is the problem that you can solve and that you want to solve. And a lot of the fintech startups and the smaller companies have actually come with great ideas. But what we see is that often they fail to grow and scale internationally because of of the growth that it requires as a company, but also because of the diversity of regulation in different systems, both in terms of like payment rails, but then also from a compliance perspective, etc. So I think one of the benefits that we can bring in, and what we have experienced in working together with fintechs, has been that we can actually combine this very well. So we actually get a lot of new ideas and sometimes also new tech that we can understand how that helps to remove and resolve pain points that clients have. Because as it was rightly said, I mean, why would it take 5 days to transfer money internationally today, where you can speak live with anyone over Skype today? And then secondly, what we can bring in is help to grow and roll out. So where initially all these startups, it was perceived as if they were true competition to what we were doing, you can see that the majority of the startups are actually looking for collaboration with larger institutions, because large institutions can help them scale out. And what we can also do, and what we are doing, is bringing in and the regulators in our context and driving that discussion. So from the blockchain perspective, whilst we used while we looked at use cases for the banks specifically in the beginning, like how can we create a smart bond product on blockchain, or how can we remove our loyalty points and make them digital money, or how can we introduce a solid new digitized trade finance solution, we kind of understood that digital cash and digital identity were key enablers. So now we're suddenly having a whole different type of conversations, because we talk about how do we get to a secure system of digital identity in Switzerland and in other countries. And I think that's the dialogue, and also where the larger corporations can really bring input, because we now work together with tech providers, with regulators in the various areas. And once you have this digital identity, for example, in place, it nurtures all kinds of use cases, health, food tracing, educational use cases, and a lot of really needed improvements that can help inclusion, but also social services.
You not only provide basically the size for new technology, the access to the markets, but also the nexus to the regulations and the rules of the games, the dialogue as such, because it's very difficult for small companies to focus on raising the money and developing the technology. And you probably also provide a platform for beta testing, for testing their new innovation, correct? In various forms, direct collaboration, indirect through incubators.
Exactly. We use
the whole spectrum.
We use the whole area. Internal developments. We work with accelerators. We work with academia institutions on certain research questions.
Maybe a quick definition for because I'm probably someone from different segment. What is an accelerator? I know it from the car, but I'm not so sure I know it from finance.
Well, the idea is the same. The idea is that you take a great business idea and you accelerate its development to market introduction by bringing in the right fuel at the right time. And that means that there's now quite a few professional, but also public spaces where young companies or startups can actually go in. They can come in with an early idea of a business proposition, and then the accelerator provides them with mentoring, with teaching, with experts that coach and help, but also sometimes with us like a bank coming in and giving our perspective about what would it take for that product, for that solution to work. And then that helps them to really much faster have that dialogue with their future clients to develop.
Oh, thank you very much. Now, Microsoft is very interesting. Microsoft has, I just read today in Wall Street Journal, reached a new peak in market cap, correct? What, 700 billion we are now? Or more? I don't even know. I just look at the chart and it went above 2,000. Yeah. So Bill Gates must be very happy, and Paul Allen too. Now, coming back to Microsoft, I mentioned this with a purpose, because Microsoft was built basically on producing a product. Yes. Which is, and you can buy or not buy it. You have the choice. Now, it's very interesting with my conversation with Donald from the research side, when he developed the cloud, and he reached out and we had substantial discussions now to try to understand we can no longer just produce a product and sell it to the market. It is, we need to open up in a different way and collaborate even with previous perceived competitors like, oh, IBM, or like Oracle, or like Vodafone, I guess, and so on. No longer can you impose, let's say, a product, say, eat or die. It is different, and it's amazing how the whole, the industrial fabric opened up for collaboration. Yeah. And coming back to the question which I mentioned, which would you consider now the most important ingredient for Microsoft and for your department, particular blockchain applied in finance, to prosper?
Well, I think based on where we are, and I agree what you said, Veronica, you have to sort of get down to the fundamental things, and I think blockchain has taught us something pretty dramatic. One, it's taught us that there's this great open source community that's rapidly developing new concepts every week that's hard to keep up with, and this should be embraced. But I think if you start to boil down, this is the key thing that I think blockchain taught a lot of us is that you can't participate in this interesting transformative technology unless you have an identity or a key. And then, therefore, how do we now manage those keys? How do we look at consumers holding those keys on their mobile phones? How do we secure that? How do we ensure that consumers who today don't do a very good job with passwords now have a password that has money associated with it, right? So that's kind of a problem, right? There are a number of systemic things that we have to actually solve for to get beyond where we are, but I think just the basic idea of identity, and even if you look at tokenizing commodities, that's effectively an identity, right? So identity has really risen to the top in terms of a core new way to think about tokenization and digitization. And a company like Microsoft, we have 400 engineers who work on identity products for the last 20 years, and we didn't discover this, right? Because we're not really necessarily been working on identity products. We've been working on authentication, right, and authorization products. And so this is a big mind shift for us, but we have a team sitting within that identity team who's focused very specifically on this idea that any consumer can hold a key, and that key is a way that that consumer can be identified and transact against. And how do you do all those things associated with that? And so we've also applied that in the humanitarian context where we say, well, that identity can actually represent a real person, and you could tie transactional history to it and start to gain some value from that in a financial sense for those consumers or constituents as well.
Thank you so much. So you mentioned a very important word which is also coming up later on and which will be addressed by Idris, who just got up right now. It's about identities. And identities, without identity, we will not be able to include all the billions of people, these big numbers, to become an active participant in our global economic, socio-economic fabric. Nuria, from the consumer side, or from the mobility side, obviously you would stress that the mobile accessibility, reliable, trustworthy, and cheap, or for free almost, is absolutely essential for making fintech happen. Am I wrong?
I think you're right. But I think in the context of this area of fintech, I think, and I think Veronica was alluding to this, I like using the concept of PPPP, which means public-private people partnerships. Mm-hmm. So it's not going to be, probably it's going to be very difficult for a single private or public entity to solve this problem. So the public-private partnership, and you were talking a lot of different partnerships with the startups, and we know in the context, for example, of a technology company or a telecommunications company like Vodafone, there's obvious partnerships that need to happen with financial institutions, but also obviously with the government, and regulators, because this is also a regulated industry. But I want to add the third P, which is the people. Mm-hmm. So I think whatever project we do that is going to be affecting hundreds of millions or billions of people has to have the people in the project as well. So in that context, there are initiatives in terms of having living labs or sandbox environments where the people can actively participate, co-create, provide feedback, and be involved in the solution, in the resolution of this big problem. Another topic that hasn't really been mentioned very much, but that me personally worries me a lot, and I'm investing a lot of additional work on this, is actually the education gap that we have right now. I think it's going to be very difficult to make informed decisions at any level in companies, in governments, and obviously individual citizens if they don't understand what are these decisions that they are making about. And you mentioned, Caspar, that even in sort of like expert circles, many people don't even understand what they're talking about. So imagine government officials or people making decisions in companies or citizens, and when the consequences of not understanding can have tremendous impact on you. I think we have a challenge there. So I think education is something that we cannot forget. Technological progress is very fast, and society is very slow. Political, legal, educational systems, they have kind of like this linear progress, and technology has this exponential progress. And it's getting the gap is getting bigger and bigger, and in the context of developing economies, the gap is huge. So we need to invest in technology literacy, data literacy, programs at all levels. And I think we're not going to solve this problem if we don't accompany it with education, because we are not going to be able to have a system that will be widely adopted, that will people understand, if the governments of the countries where this is going to be implemented don't understand it, if the people don't understand it, So I think the education for me is a key element as well.
Education is key, collaboration is key. We have giving people an identity to reach the mass is key. Now all that is embedded in providing better services in order to accommodate the 3 billion people. There is one thing that I didn't hear so much, but I think which is the absolute fundament, is you all of, be it from technology market or from the policy side, is you have to create an environment or a product or a service which provides trust to the client. We will not buy a product or be serviced by somebody who we don't trust. At the end, finance, a medical doctor, law is about trust. It's a people business. At the end, there is the person, an individual in the center, and not the technology. Alexander, from your side, you have seen so many cycles, so many evolutions in technology, in finance. Companies go down and come back up again. Countries go down, come back up again. You trained all these soldiers who today try to make a more stable world in terms of economic fabric. I would like to ask you, what is the most important ingredient to make all this beautiful tech bus really work and service us as citizens and accommodate the 3 billion people in the world?
If I had the answer. No, sorry, I lost my voice and my mind to cold. Yeah, I think from my perspective, in a way, regulation has a role to play in giving trust. I mean, what is important is that you have a record, as it is always said. It takes a long time to build up your credit. It takes a second to lose it. So basically, trust is something that is built over time. That responsibility within companies, responsibility of people, responsibility of governments, and so on, to do things in a consistent way and not defraud people. Now, that's easier said than done, obviously. And this is where the regulation comes in as a sort of a garde-fou. And you will have regulation at all sorts of levels over fintech. On some of the things on protect the consumer protection, on regulation of various products, developments in finance. You would have developments in taxation to make it relatively fair so that people don't have too much of an incentive to evade it. You have it in all sorts of ways. I think there are three challenges that I want to point out in the fintech context. One is we talked a lot about identity, But that, to my mind, also raises concerns about privacy. And what is the correct balance between anonymity and accountability? And that is an extraordinarily hard balance to find. And we can give examples, but anyway, that's one thing. The second one is that one of the things that happens in fintech and all the developments is that they rely quite a bit on network externalities. And that as something catches up, there are advantages to it growing further, and that raises all sorts of questions about competition, about size, about control, and so on. The discussions about should Amazon be, for instance, regulated in a particular way, and that applies also to other fields in fintech. Finally, I think, and this panel is a very good example of that, we're not only talking about fintech and what regulators in every nation should be doing about it and so on. We are in an era where this technological development is combined with globalization. And in fact, these technological developments like the internet, the World Wide Web, and so on, are the agents of globalization in many ways. That also means that there is a worldwide stake in keeping that going, in keeping that open, and in building, to come back to your question, the trust in the whole system. And it's a fragile system. We have to be worried about that and conscious about it. But I think this international dimension, for instance, regulation, is going to be there. It means that decisions or suggestions have to be discussed not only at the national level but at a wider level. And it requires, if it's going to work, some citizen participation and some sort of, I hesitate to, in the world of very different meanings of the word and very different degrees, some element of democracy and participation.
Yeah, I think on the trust issue, I think it has a connection with education because we tend to mistrust what we don't understand or we don't know. So I think the more you understand something, the more you are able to trust it. And another point that I wanted to make is that there are technologies like the distributed ledger technology that is able to implement transactions between people that don't necessarily trust each other. I think that's one of the actual use cases of using distributed ledger because, I can transact with anonymous people that I don't trust, but because there is a record of all the different, and it's all public, it sort of like compensates for the lack of trust. I can transact with a centralized authority that I trust, but if it's a decentralized system that has some warranties of, being transparent and accountable, I can do transactions with people that I do not trust. Mm-hmm.
So you like to be transparent through the distributed ledger technology. On the other hand, Alexander, you stress there is a balance to strike between anonymity and transparency. Mm-hmm. How do you square these two things?
I think what Veronica is in mind, I think is absolutely correct. If you have a public blockchain which is not entirely private, that there are some controls, that in the inputs are some know your customer stuff and so on, then that will work. If it's purely anonymous, it may work in certain fields. I don't think it works in the payment and financial field that well. Yeah. I mean, probably in health and so on, the privacy of your identity is traditional, and the distributed ledger, and combined with a good way of ensuring the identity of the patient, is going to do the trick. Okay.
Yeah. I mean, the point that I wanted to make was the fact that that we are developing technology that is able to mitigate some of the requirements in terms of trust, by using this technology, depending obviously on the use case and depending on, on different scenarios, but it's something to take into account. And on the privacy issue, usually we talk about having this kind of like utility function where, you know, you have privacy on the one hand, and then you have the value that you get from giving up your privacy on the other hand. And I think it is a personal decision to say, well, I am willing to give up some of my privacy because the value that I get from, you know, giving up some of my privacy is X. The key there is 2 pillars. Transparency. I need to understand what privacy I'm giving up and what is the value that I'm getting from it. And control. I should be able to make that decision in a transparent way. And those pillars, transparency and control, I think in the early days of sort of like internet services, you know, and so forth, it's been a little bit the Wild West, where there was really no transparency and no control. I think now, you know, I don't know how many years later, precisely because of what I explained in terms of technology moving exponentially and society moving linearly, we're kind of catching up. And I think we are seeing increased understanding from people's sides and government sides and increased pressure to technology companies to actually execute on these 2 pillars. And I think GDPR is an example of, you know, clearly stating, you know, that people should have more control than they have right now, and that there should be much more transparency than there is right now.
That's interesting.
May I just say one thing on that, on the business of trust? I'm going to talk about that this afternoon, but I think what is crucial is to understand that you do need trust in people, you do need trust in institutions. You cannot just have a trust in a computer program. And this is the business about the Bitcoin ecosystem, that you can do away with any intermediary, with any trust in any individual, anything. You're just within the network.
Yeah,
I think at the end of it, you have to go to the real world. You have to go outside.
Authority,
And even within the system, you need to know who can change the system, what happens. So in the end, there's no way to bypass, if you wish, political or governing or controlling institutions.
May I Alexa, quickly come back to the 3 challenges you mentioned. It's the number 1 point was the balance point that you mentioned. The 3 points which you mentioned of challenges. The first one was identity, privacy, and anonymity, accountability balance. The second was the network externalities, correct?
Yeah.
And the second point is something I think we tend to forget. What is interesting, David Lipton from the IMF. David Lipton is the deputy managing director from
First
he's number 2, right? He's number 2.
Yeah, at the fund, but he's the first deputy.
First deputy, sorry.
Deputy managing director, and he's the first.
He's the first. So after Christine, he's the guy. After Christine Lagarde, he's in charge.
Yeah, it's always an American, so compensate.
Sorry for the
European
titles anyway. So what I'm impressed of, what he stressed in every single panel that I attended, he closes the panel with, beware of the losing side. Or he mentioned like the externalities. Beware of the losing side. Because if you marginalize the ones who are less well off than before, or are being pushed aside without contributing anything bad, things may come back at you and hunt you.
I mean, that's why I said PPPP. That's why I included the people there, because I think it's critical.
Exactly. And the third point was the globalization point with the internet as agents that could lead into in system fragility.
Yeah. I mean, it's both part of it, both part of globalization and an agent of globalization.
Perfect. So now I make a statement. And I started with, it took me 6 months to open up a bank account in Switzerland as a Swiss. Not that I should be privileged, but 6 months is simply too long. Nobody can wait 6 months. It takes how much to make a child? It's 9 months. It takes 6 months to open up a bank account.
How long does it take to become a Swiss citizen?
Yeah, how long? That is
too long.
Too long. So, okay.
It's not my problem.
It's not my problem. Okay, I say banks are bad. Banks are bad. They don't service us properly, and they always go bankrupt. And then we have to pay their bailout. So banks are bad. Let's scrap them all. We don't need them anymore. And put all the banking on the cloud and the trust into blockchain. Now, that would be heaven, I guess. York, you are the proponent of the new world. We don't need the UBS any more than the Credit Suisse. Microsoft will be the leader, the bank of the future.
Not at all. No. I mean, banks perform many more functions than retail banking, clearly. So I think there's, banks will be around for a long time. Will a retail bank branch be around for a long time? Probably not. But and that's just digitization, right? I mean, so and by the way, Microsoft does not have any aspirations to be a bank. But I think the phenomenon of globalization that we see in whether it's social media or blockchain or other technologies is this border transcending problem that forces, when I have these conversations, I almost want to say, we really need a world government, a world governing organization to deal with some of these issues because they don't exist. And, governance, I think, in tokenization and digitization is very important, and not governance by governments necessarily, but governance in general, whenever we have multiple parties performing transactions together on a same network of any type, whether it's supply chain or anything else. And governance essentially is just an agreement by the parties about what are the rules, right?
Actually, last night, Satya was bringing up this concept.
Who is Satya?
Satya Nadella, the CEO
of Microsoft.
He was mentioning that Brad, the legal counsel to Microsoft, has brought this concept of a digital Geneva Convention precisely to address this challenge of the fact that there is no borders in the digital world. And that, how do you ensure something like the Geneva Convention, but in the digital world? So their proposal was to have this digital Geneva Convention that will address all these governance challenges trans-border. Because
and I think we know from the internet times that it was very important that we got to some protocol standards like HTTP, etc., because that actually helped to connect everyone. And we see the same situation happening in the IoT world with the machine connectivity, and that's really key. And then you don't have to necessarily regulate and standardize the different business models or the different applications and processes that run on top of that, but you have that interoperability, and that's really important because at the end of the day, that what will help us give scale. And I fully agree with your comments on trust and literacy. I guess many consumers still trust banks quite a bit, especially when it's larger money amounts, when it's more complex things like financing your house with a mortgage. Although we see in the millennial and in the younger generation more trust also with digital platforms coming up. But even when I speak to 18-year-olds and I ask them where would you go if you had $10,000 to invest, they say I'll go to a bank, right? So there's still this level of trust, and that comes because we are so highly regulated now. Because there are so many checks and balances which are making it also a bit costly and often cumbersome. And it shouldn't be 6 months. I just opened a business, created a business, and opened a bank account in Portugal in 2 days. So things can actually work quickly.
In Portugal?
Yes.
Was it you based in Portugal or somebody else?
We don't have SME business or so in Portugal.
By the way,
but I mean the point I want to make there is that there's lots of acceleration improvements happening in that space. But also if like digital companies are very carefully looking also if they really want to come into banking services, because that's when the regulation kicks in. And we want that. We need that level playing field. And that's also the discussion we see with ICOs and cryptocurrency investments, because many people didn't know what they were investing in.
Right.
They didn't get it. And there's a lot of conversations at the regulatory front now to see, can we please protect consumers in putting all their money into coins if there's no promise guarantee about what they're actually investing into?
And there's no promise. It's like a donation.
And those are safe things.
There's no promise at all.
Exactly.
I mean, it's like a donation. It's like a free donation.
So we're pushing the boundaries with these new systems and technologies, and then we're bringing it back in. And I think that's a very exciting.
I see emotions coming up from the banking side now that I declare banks are bad. Alexander.
Oh, a side comment. Brad Smith, by the way, was a
yeah,
student at our institute, and he gave his talk, in fact, partly at our institute at the UN.
Nice.
So he was indoctrinated by you to come back
No,
to
no,
Geneva.
not by me.
Oh, not by you. Okay.
He was on the legal side.
He was on the legal side.
No, we don't know anything. But to come back to the legal side on that, what we have to remember, once we have transactions and so on among people, we have a legal system. The legal systems differ from country to country, but there are usually some common principles. And where things like initial coin offerings stretch the limits is that they're sort of in between. The regulators are always slower than the new developments. It's quite normal. Yes. But at some point, for instance, with initial coin offerings, they have to come in. And I think the Chinese, I was talking to the Chinese regulators in September last year, just when they were banning initial coin offerings. And their record showed that at least 30% of the initial coin offerings were pure fraud.
30%?
At least. And if you look at the coin offerings in the United States and so on, many of those things have absolutely no legal guarantee. They don't promise anything. You can go and buy a white paper on the internet for, the cheapest ones are about $300. The more reputable ones or useful ones are about $1,500. And what you do, you say, I want to create a company with that name. It's going to apply blockchain to make it a better world, especially in health. For instance, please make me a white paper. And they'll make you a whole thing, including a board, maybe in some cases with fictitious names, but in some cases they ask you to fill it in, okay? And tell you how to what portion of the coins should be offered and so on. Then you go out and you offer your coins. But what the guy who gets the coin in exchange... Some of them, they get members in some sort of association to be created among all the holders who will have some unknown advantages. And this is something that is very worrisome. And it's very worrisome because when that collapses, it's going to give a bad name to all sorts of good things.
And that's why you see, to build the right policies, to build the trust in the system in order to make the coins a good part of the good finance to reach the marginal citizens. I would like to open up the floor to some questions. Yes, please. Maybe the name and the question ends with a question mark, not with an exclamation mark.
Whoa, sorry. My name is Raju Chidambaram. And,
1 second.
I think I can project, but that's fine. My name is Raju Chidambaram. My question is for Veronica. I'm a fellow and part of the MIT consortium that you're a sponsor, right? And the problem we're trying to solve is everybody wants to enjoy the innovation from shared data. Nobody wants to release their data because of privacy, GDPR, all kinds of concerns, right? And that is the problem we are trying to solve, privacy-preserving transactions. How do we get something like that out of the academia? What is a use case where you would be willing to actually write a check for?
Well, I think the fact that we're collaborating on this is extremely important, and not just with MIT, but also other institutions, because as we have public chains or even private chains, we need to fix that issue. I think one good example is probably a very recent project that we also published about, we call it MADREC. It's with some other banking partners. It's an abbreviation for Massive Anonymous Data Reconciliation. And what we did there is all the companies have like standard data that you need to know and check for the banking transaction to be compliant. Now, if you look at the industry, a lot of banks have different data, right? The data quality is not consistent and it's not the right thing. So we implemented a blockchain, and effectively what now every bank that participates in that network can do is it can check that data consistency against the other participants' data, but without revealing the data. So what you get back is an information about anomaly. Where is your data different from the other? How big is the gap? And then you can go and solve it, and that's a different process. And I think that's a very good example where basically you use that network, but you're not exposing anything. And that's a trend, I think, where we're getting towards safe attestations from accredited data providers that then can be combined and released as per an individual's or a company's need.
Yeah, I mean, just from a technology perspective, this is something that we've enabled in our cloud, which is essentially trusted computing frameworks, such that you can share data with other parties in a agreed secure format and allow querying ability against that data without the other party actually seeing what the data is. And this is quite a powerful construct that because of this idea that you need to compare things, but not necessarily you're allowed to see it. So,
Thank you. Another question? Please, yes.
Yes, Joe Riedweg. I'm an accountant, tax advisor, and administrator. I've heard a lot the word of trust this morning from Professor Swoboda. I fully agree. I think it should go even further. The banks, their first innovation should be that they put the client into the center again. The client is just this frustrated individual sitting somewhere, not getting any attention, not getting any response. And I think the banks really, rather than thinking about fintech, they should spend millions on getting the client in the middle again. That is first and central, in my opinion.
Was that a question or a statement?
Statement.
It is.
It
is whatever
if it's directed to me,
it is whatever it is taken for.
So put the client in the center, Veronica.
I take this as a question, and I fully agree. I'm also a banking client. I have had frustrating experiences myself. We're investing heavily in what we call the whole client experience program. That's one of the biggest investment parts. And the good thing is that fintech services can help us with it. The difficulty is where previously people had their advisor, and the advisor knew everything about you, and he could very easily advise you. Now a lot of the interaction happens on a mobile phone or on online banking. So we need to rebuild all that knowledge basically into the system of the bank, so that the digital channels can respond in a very personal and very knowledgeable way. And that's actually difficult to do. So I think we simply have a lot of legacy and a long way to mirror that. And there's great progress, and Nuria is probably a better place to talk about how machine learning and new sensing technology helps basically to augment our systems to do and deliver a better experience. But it's this end-to-end automation. And that is in the investment bank, it's in the retail bank, it's in wealth management, it really is everywhere where we simply have these processes built up for a long time. But now we can start reducing them significantly. And that's happening with like online onboarding, with getting data together, with automating. We're fighting hard here together with other market participants to get digital signatures established. And when you then can click and sign things, you don't have to have a paper process accompanying things. I mean, so all of this is going on. So I think it is a big focus for banks.
Yeah, and it's an issue that transcends banks, right? The same thing that you're doing, putting consumer in control of their own data at the center of all their transactions, applies to healthcare, government services, identity. Right?
No, if I may on that one, putting the consumer in control of his own data is a very polite way of saying, let the consumer do the work. Because that's exactly what's happening in banks and in other places, or in the grocery shop. Now you don't have checkout people. You've got to check it out yourself and then pay the thing and so on. And unfortunately, from my perspective, this is a way which depersonalizes relationships, any professional relationships, because everything has to be done through artificial intelligence and so on, including driving cars. Now, that's fine to some extent, but it does raise questions. And sometimes the consumer asks, well, what do I get in exchange? And I'm not sure the consumer always gets that much in exchange, except a bit more work.
I mean, related to that, actually, I wanted to mention some research which might anticipate what could happen in this sort of like a dehumanized world, a world where there's a lack of human interactions, which is there was some research where they asked people what was the main way that they obtain information. If it was using digital means and online, or if it was using reading the newspaper or asking people. And what they found was that there was a very significant difference in how much people trusted other people. And then they asked them different kinds of other people, your neighbors, people you run into the street, people of a different nationality, people of a different religion. There was a very significant difference between the people who preferred to obtain their information through physical means, who tended to be much more trusting of other people, than people who access all their information using digital means. And my hypothesis is that when you do everything digitally, you don't exercise human interactions. For example, if I'm here in Davos and I need to go from Promenade X to Promenade Y, and I'm using Google Maps, I'm not talking to anyone, right? If I didn't have Google Maps, I would ask people on the street. So the fact that we don't exercise interacting with other people, it is making us trust other people less. Because you know we don't use it, right? And we sort of lose it, right? Problem, So something interesting that could happen, which is related to this concept of trust, is what will happen when your entire life you actually don't interact with other physical humans. Could there be an impact on how much we trust each other? And I think we are seeing some of this with all the xenophobic movements that are happening right now, and with the lack of trust that there is increasing actually towards people that are sort of like different to you, right? And perhaps, and this is just a hypothesis that I'm launching here, no? Perhaps if we interacted more face-to-face with people who are different to us, you know, that will help us build this trust that it seems we might be losing because of not interacting, you know, with human beings.
Yeah, and on that last point, it's typical that if you analyze voting, the people, for instance, who are strongest voters against immigration are from regions where there is no immigration.
Yeah, they haven't had the...
They haven't had
and I think it goes back to education, because you don't trust what you don't know,
exactly.
right? So they have these stereotypical, I guess, images of where immigrants are, which have nothing to do with reality.
Or specifically and very deliberately skewed images.
Yeah, exactly, yeah.
Thank you so much. I would like to conclude and try to summarize what we have learned today. What do we need to do to reach the 3 billion people to financially include into our socioeconomic fabric? From Alexander's side, include the citizen to build right regulations which provide a system of trust. While from Veronica, the key is in collaboration between all stakeholders to have a successful outcome. From Nuria, education is essential for financial literacy to properly apply the new technologies. And from Jörg, banks will be here for a long time. Thank you so much for everyone to come here this morning.
Thank you.